Here's Dan Shapiro to help you find your edge, master your process, and own your future.
Hey guys, good evening everybody. Welcome to another edition of the AccessToTrade.com nightly wrap-up show. Hope everybody is doing well. Cheers for a pretty good session. Hope everybody is doing well. So let's talk about it, guys, right? Let's talk about it. Everybody knows by now, NASDAQ down 2% on the day. Again, if you've been watching the video, if you've been following along on social media, obviously everybody in the webinar kind of knows what we do on a day-to-day basis. The writing was on the wall. I mean, it really, for anybody to really wake up today and look at the tape and go, I can't believe the market's down. I mean, again, we talked about it even on last night's video. You had all the clues. You had the speculation money coming out, right? Speculation money coming out with the uranium, the rare earths, energy names. You had the market leaders getting absolutely smashed, the Metas of the world, the Microsofts of the world. Again, poor earnings. Netflix earnings weren't great either. A lot of bad news, right? A lot of bad stuff coming in for the day. You had PLTR's earnings last night. We talked about it. At that time, PLTR gave up its whole gains, right? Gave up its whole gains. And by the time, the video was recorded, it was flat. By the time you guys saw the video, PLTR was down 10 points. And then today, stock just, got absolutely smashed. It was there. I mean, it was there. And if you're a trader, if you've been following along for a while, again, obviously in the webinar, you kind of know, we took advantage of the data. And we say this all the time, your eyeballs don't lie. Before you can start figuring out about technical analysis and this, that, and the other thing, it's sometimes common sense is the biggest indicator. If something's not going up, right, when it should be going up, that's a major, major red flag. And today, the AI revolution, at least for one day, hit a speed bump, right? Again, you could turn around and say, well, Michael Berry tweeted out yesterday that he's short. Yeah, Michael Berry's been short for the last 9 years, okay? I mean, he's been short everything for the last 9 years. Whatever, bro, right? Is that a coincidence? Whatever, is if you want to convince yourself that his tweet is the reason that we went down 2% today, okay. Whatever, right? Whatever. But the point is, the market up to today's session, as you can see, as we talked about for countless videos, kept on doing the same thing, right? Kept on doing the same thing, closing on red candles, which are lower closes than opens. And we talked about every single day the leaders of the market, right, getting slammed, but the stocks who kept on holding up the NASDAQ 100 had the same common denominator. They kept on getting deals with OpenAI, right? One day it's Amazon. One day it's AMD. We'll get to AMD in a second. When the next day is NVIDIA. The next day is Oracle. And this, that. And then slowly but surely, we kept on saying, look, it's not imminent, but watch. And if 2-3 videos in a row, I'm like, just watch that 626 area. Watch that 626 area. We lose that 626 area on the QQQs. We're going to go down to the 10-day, right? And again, it won't be a big deal until it turns into a big deal. And, stocks gap down, they tried to rally, they tried to reclaim back 626, they got stuffed into 60-minute supply, and we closed at the lows of the day. And the reason why, this is kind of a big deal, right? Or at least I don't want to say a big deal. At least this is a more of a warning sign is, number one, we lost the 5-day moving average. We lost the 10-day moving average. So now you're talking about the next, support on the Qs is somewhere around the 614 area. Okay. And, why is this a big deal? Again, stocks trade from supply to supply, but they trade from demand to demand to demand to demand. And again, it's not a big deal yet. Again, we're in a massive, massive uptrend. The last 24 hours shouldn't be that big of a macro big deal, especially if you're an investor. But from the trading aspect, you're getting some great opportunities to the downside channels. But the biggest part about this whole formation is, as long as we stay above the 50-day moving average, which again is about 19, 20 points away. Again, there's no alarms should be set, but again, it should be, again, another conversation that you should be at least having with yourself of what happens if we get down to the 50-day moving average. Right now, again, the 5-day moving average, again, not a big deal. Okay, we lost the 10-day moving average, not a big deal. We're about to test the 20-day moving average, not a big deal. We might then test the 34 EMA, not a big deal. Once we have that conversation at the 50-day moving average, it's probably going to be a big deal. So you kind of want to make yourself, put yourself in a position of strength, especially if you do have a book, right? If you're only a long bias trader or a long bias shareholder, you got to have a plan, man. You got to have a plan of what you want to do, because again, it's all fun and games until it's not. And traditionally, again, if you look at the rally since April, every single dip has been bought. The problem is every single dip was bought with speculation money continue to lead the way. That's not happening anymore, right? That's the biggest takeaway out of all this selling in the probably the last several days. That's the best way of saying it. You got Bitcoin closing. Bitcoin, this is the lowest move in the last 4 months, dipping below 100,000. Right now, it's around 100,000. The last time I looked at it, okay? So again, that all represents speculation money. You have earnings coming out tonight, right? You got, some stocks getting, pretty hit today. You got SMCI that, their quarters, that's the best way I could say is their quarters sucked, right? Their quarter sucked. There was nothing good about their quarter, right? You got Pinterest. Okay, you got Pinterest getting just murdered, down 16-17% after hours. Not good. You got AMD that actually came out with with a decent quarter, right? AMD came out with a decent quarter, but just like the conversation on PLTR yesterday, it's just not enough, right? It's just not enough. Sometimes it doesn't make a difference how good your quarter is. And, you saw people yesterday, last night on social media, but PLTR had great numbers. They had great forward guidance. Not when doesn't make a difference if they have the greatest guidance in the world. If the sentiment is sour, right? I've always said this all the time. It does matter when you report earnings. If you report earnings, I bet you tonight, right? I bet you today, if we would have closed up 400 points on the NASDAQ and AMD came out with this earnings report, AMD would probably be up 10%. But it's not, and that's the whole point. Sometimes the bigger picture is sentiment. And when you see sentiment getting taken out of the market, just like we saw yesterday with PLTR, we're seeing that right now at AMD. Last night, again, the winner of the Toller's Dwarf competition, HIMS, was up 6%. Guess what? HIMS gave back the whole move, right? It gave back the whole move because nobody cares about the quarter. That's the whole point. Nobody cares about the quarter when market sentiment is souring. So you have speculation money leaving the building. You got sell the news on a lot of things, a lot of PRs, whether it's Oracle, Nvidia, Apple. Apple actually held up pretty well today. Apple's actually up $1. Introduced a new, I think it was a new laptop under $1,000, I guess, whatever. But the sentiment is souring. You're getting technical damage on a lot of things. And now the question is, what happens next? So, right now, everything, as you can imagine, on AMD's and Pinterest and SMCI's report is getting slammed after the close. I had a whole group of names that I'm watching for tomorrow to the downside. A lot of them already below yesterday to the pivots that I want to sell them. So we're going to do tomorrow just like we did this morning. We're going to look for opening range lows. We hit Tesla pretty well this morning, opening range low. I rejected NVIDIA into supply. It got just absolutely destroyed, lost a 2-week cycle. PLTR opening range lows, gave like a $4 or $5 move. HIMS, like I said, lost that 44 area. I even tweeted HIMS. I said, hey, 44 held twice. They take it out, it has to go down. So you're getting a lot of bad mojo here, but the most important part is to be ready for tomorrow's session. The one thing I keep on reiterating on any market that is euphoric or a little bit of sell bias, right? Because we're not at that point yet of fear, a little bit of sell bias. The last thing you want to do is something called shorting into the hole. Shorting to the hole basically means when stocks are gapping below their previous day's levels, the last thing you want to start doing them is shorting a pre-market or at the open, because there's always I don't say always, but there's the majority of the time you're going to have kind of a squeeze back, right? You're going to have a squeeze back, a short covering rally, at least at the open. What you want to do is kind of what I did today with NVIDIA. And congratulations for all you guys recording a video with me. We want to short it into that rise, into that declining 60-minute supply. I will be looking to do the same thing tomorrow with PLTR, with NVIDIA, and a whole slew of other names. There's a lot of names I really like. OKLO smashed first close below the 50-day moving average. I like OKLO for continuous weakness. HIMS, I think, obviously, I believe goes lower. It gave up its all earnings lows. NVIDIA, I'm still watching for more weakness. Guys, look at Boeing's chart. This thing looks like death. Look at Boeing's chart. Look at Google. Google today lost the 5-day moving average. If this thing loses today's ranges tomorrow, it's still one of the names that is still up. I like this thing to potentially get down to the 10-day moving average. Look at Airbnb. Close today, first close below the 50-day moving average. Not a good thing, right? And Tesla. Let's talk about Tesla really quickly. So Tesla gave us a really, really good opening range trade, and the stock, as you can see, stopped at the 20-day moving average. We've been at the 20-day moving average 3 times in the last 1, 2, 3, 4, 5, 6, 7, 8, right? You see that? You see this brown line? You see how it stopped there, next day went higher, stopped here, next day went higher, stopped here, right? Now you're thinking as well, tomorrow it should go higher, right? Yeah, I'm not looking at it to go higher. Okay, if it goes higher, it goes higher. That's fine. And everybody knows they got the November 6th vote. But here's a fair question, right? What do we know about what's going on in this market right now? They're selling news, right? They've sold news pretty much on every company that had a good PR or, friendly PR in the last, week or so. Okay, now what happens if Elon gets his $1 trillion pay package? Right? Think about it. What happens? And they sell the stock. Well, that's the whole point. I will be looking for this thing. Today I had a pretty good short on it, but I will be looking at this thing to lose the 20-day moving average. Again, it's held. Wait, first of all, I'm wrong. Look how many times it's held the 20-day. For the exception of that one time they got smoked off the 20-day, look how many times it's held the 20-day moving average. So all this brown line. So the 20-day, I will be watching this 8-day range. Tomorrow will be day 9. And again, is there a world that they come out with on the November 6th vote and they, give Elon Musk the green light and they still sell it? Yeah, there will. And if there is the world and that's the sentiment that we're in, then you can have a really, really aggressive trade. But for tomorrow, I will be watching the 20-day. What happens if it actually finally loses the 20-day moving average? Well, I'll tell you what happens. If it starts losing the 20-day moving average, then if you believe in the theory, stocks trade from supply to supply, when then stocks trade from demand to demand, and the next demand zone is the 34-day EMA, which is the next supply, which is basically $12, $13 from the closing price as well. So that's where it is. That's where we are. If you're an investor, again, get your ducks in a row. You know the levels. You know the importance of stocks holding rising support. If you are a trader, especially if you trade it with me on a day-to-day basis, you kind of know literally what we do here on a daily basis. If you are interested in pivots, guys, all it takes is 30 days to see if it's a right fit for you. But got the game plan ready. Let's see how the market responds tomorrow morning. Let's see how the market handles its first rally, if it gets stuffed into supply. And then definitely let's start watching those opening range lows. Guys, God bless. Hope everybody's doing well. And with God's help, I'll see you tomorrow. Take care.